Hello everyone. As some of you may have noticed, a few central banks have hiked the interest rates and some others are preparing to hike them in near future. Now, this raises a good question. Are the central banks panicking? And if they are panicking, what is the reason? And if they are panicking and there is a good reason, how far these rates can go. So let's see what's going on and then we'll discuss how far the rates can go. So the last few weeks or so have seen a chill wind run through the halls of global central planners' offices. First among the majors, it was Bank of England who surprised investors with a rate hike in mid-December. So they were the first one who raised the interest rate last December after promising they wouldn't. And then this morning, ending QE and raising rates again. So this morning they have hiked interest rate again by 0.25%, although a lot of people were expecting 50 basis point hike, but still it's a significant step. And not only that, they have Bank of England has ended quantitative easing as well. So, and by September of this year, the implied rate would be somewhere around 1.460%. So, which is significant because rates are near about zero. Anyway, moving on. Then it was the Federal Reserve, various group thinkers doing an extremely rapid volte-face from forever dovish to the hawkest hawk in Hawkland, calling for halt in QE, imminent and rapidly rising rate hikes, and then the start of QT. So we are aware that Fed has been saying from its I think it was November meeting that they will no longer do any QE by March of this year, start hiking rates, and then potentially from September or November this year they will start the quantitative tightening as well, which means reducing their balance sheet. So now to the Europe. This morning saw Christine Lagarde change her stripes from uber dove to more fence sitter, and some would say actual hawkish bias was overheard with Bloomberg reporting that ECB policymakers see policy change at the March meeting if inflation doesn't ease. So they are keeping it data dependent. So if inflation is low, they may not hike, but they are starting to or they are planning to hike rates in Europe as well. And as you can see, by December 2022, they are planning at least 4 hikes now. And interest rates in the bonds are reflecting that now, and rates across the curve are flipping back into positive territory. As you can see, 2-year euro bond has been in negative territory since 2016 or end of 2015, and as now is the first time since 2016 the rates are positive. All of which leads us to this evening and the open of Japanese markets. As Bloomberg notes this evening, speculation of monetary policy normalization has reached Japan. Now, Japan is notorious for low interest rates and low yields on their bonds. In fact, they have been in negative territory just like Europe since 2016, if I'm not mistaken. 2-year OIS, a proxy for investor expectations of future policy rates, breached zero for the first time since 2016, the year the Bank of Japan introduced its negative interest rate policy. So again, just like Euro 2016, it has been negative since then, and now it is positive for the first time. This is the 2-year bond. 5-year JGB, so Japanese bond, have also pushed back above zero for first time since 2016. This one has also been in negative territory and first time positive. Interestingly, even the 10-year JGB has surged up to the top of its yield curve control corridor. So Bank of Japan set up a range for their 10-year bond yield, and first time it seems it has been breached, and this colored area is the range or corridor, and it's just over or just near the breaching area. And last time 10% yield were at this level, BOJ quickly stepped in. So they quickly jumped into market last time, and then yields went lower. Market participants see an increasing chance that a successor to Kuroda, who is the central banker for Bank of Japan, will lift the negative rate policy. So market participants don't see central bank to be stepping in and getting rid of or lifting the negative rate policy. We'll see. I have my doubts, but we'll see. Is this, and the main question is, why are these central banks suddenly coordinating and starting to hike interest rates? And is this what's world's omnipotent puppet masters panicking? Is this why the world's omnipotent puppet masters panicking? And what this chart reflects is the high inflation. Inflation is rising. It wasn't as bad until October of last year, but since then it has been well, actually it has been going up since before that. So inflation is the justification being provided by European Central Bank, Federal Reserve in United States, Bank of England in UK. Japan, I'm not sure. Japan, I don't think the inflation is high, and we can look into that shortly. But indeed, it is the reason why the rate hikes are now coming into light. The question is, can the rates be hiked in any meaningful sense to control the inflation? And the answer is no. Any rate hike, any meaningful rate hike, would cause problems for bond market. It would cause problems for the sovereign debts, It will cause problems for the housing market. It will cause problem for the stock market. Any inflated bubble that we have in our society will basically start to crumble, or it'll pop. So the question is, what would the central bankers do then? Well, let's think about it. It ultimately boils down to the governments of respective countries, and all the politicians would like to be elected. So if a politician has to be elected, he has to keep his constituents, or his, well, they consider them masters, so their subjects happy. How can they keep their subjects and the constituents happy? By making sure that they get food, they get things they want, and inflation is not high, essentially. Um, so if that's the case, then logic would say that the politician will force the central bankers to increase the interest rates and control the inflation. Well, it may seem so, but it has, like I said, serious repercussions. Um, Even though politicians would like to be elected and by keeping the public happy, I don't think it is possible. I think we have long back crossed that Rubicon, um, and any significant hikes in interest rates is not possible without collapsing the whole house of cards. And collapsing the house of cards would not help politicians to get elected either. So it's not in their favor to basically make that happen. Um, so I think, as I've been saying all along, I think they will increase, our central bankers will increase interest rates nominally, maybe 50 basis points, 75 basis points, or even 100 basis points maximum, I think. And that would cause stock market panic, bond market panic, and that may cause recession also in the economy. So unemployment will be high, or will start increasing. It can bring a very short term bout of disinflation as well. Maybe not deflation, but disinflation, and that would actually bring the same old policy of negative interest rates or near zero interest rates back in picture to somehow support the economy, or help economy grow again. I'm sure it will be a very tight rope to walk for both central bankers and our politicians and leaders, but that's how I see it progressing. There would be some other elements that will actually play in this saga, and that would be ban on cash, central bank digital currencies. Potentially you can throw in there some sort of cyber attack on banking infrastructure that could help central bankers and the governments, that will provide them an excuse that let's bring centralized CBDCs or something like that. So yeah, all these things will also happen during the way, but the bottom line is that too much interest rate increase is in my opinion not possible. They will try to do some nominal changes. It will start crashing the system or popping the bubble, and suddenly, all the central bankers will panic again to somehow inflate that bubble or patch it again. So yeah, that's what I think. Uh, Please share your thoughts if you guys disagree, and I will see you in the next one. Bye.